dímelo, mi gente. Marcucci here again in another video, and today we're going to be talking about an open letter that was sent to the SEC by Ondo Finance in response to the NASA proposed rule changes regarding the trading of tokenized securities. If you did not know, the NASA basically made a proposal so they could start tokenizing stocks on the NASDAQ, and I thought initially it was pretty good, but it looks like they might need to kind of rework it and kind of set a better precedent. At least this is what I got from the letter. So we're going to read the letter. It's only a 5-minute read. I'm not going to read all of it, obviously, but if you want to read it, there's a lot of good information. I'm just going to be going over what I think is most important. But if you want basically a simple summary in like 30 seconds, I'm going to try to give it to you. So this is from Marty Party. He is always giving out one of the best alphas. I always recommend you to follow them. So he says transparency gaps. So the proposal relies heavily on the Depository Trust Company, the DTC, the U.S. primary securities depository for blockchain-based settlements. Yet DTC hasn't publicly disclosed details on its tokenized settlement process, rules, policies, or fallback procedures if things go wrong. Without this information, Ondo says regulators, investors, and small firms can't properly assess risk or compliance with the Securities Exchange Act of 1934. Hopefully that changes and we get more transparency and we know what the rules and policies are. And the next one is fairness and competition concerns. So hidden DTC mechanics could give incumbent Wall Street giants who have insider access. Obviously there's always going to be winners and losers, and the winners usually tend to have insider access and the losers tend to not. But an unfair edge, potentially locking out innovative newcomers like Ondo. This might stifle competition and undermine investor protections, echoing broader debates on how TradFi incumbents adapt to blockchains without dominating it. And to me, this is super, not concerning, but it's really, it speaks volumes because, as you know, Ondo and the whole Ondo team and, the founder and everyone that works at Ondo are really well connected, right? They're ex-Goldman Sachs and a lot of companies, Robinhood, whatever company it may be, so that they're not even insiders and they don't have access to this information. It's pretty incredible, right? And that's just for Ondo. Imagine all the smaller firms that want to get in. So the first part, they just talk about, what kind of the deficiencies are. Then they obviously explain what Ondo is. Obviously, if you do not know what Ondo is and this is your first time watching a video about me talking about Ondo, this is basically what they do. I suggest you watch all the other videos. So they have some NASA proposals that they kind of want to give out, and this is the best example I can give you. So by way of example, the proposal notes that if a participant places an order in a tokenized security, the DTC will be expected to carry out the instruction in accordance with its not yet established rules. So they don't even know what the rules are. They just, here you go, do whatever you want. Policies and procedures. But if it cannot do so, it will make alternative arrangements with the participants. So basically, if they cannot deliver the tokenized security, by the rules that are not even done, and they want to deliver it still, they will have to come out to do a separate alternative arrangement, which just sounds incredible misuse of blockchain technology. So we believe specific features of this kind are impossible for Ondo and other interested parties to evaluate without knowing more about how both the DTC policies and procedures will function in the first instance and in the alternative when handling tokenized security transactions. By allowing the proposal to proceed at this time, the Commission will potentially create indefinite room for principal rules, policies, and procedures and alternative arrangements to be established without meaningful input from the public. So, hopefully we get the rules right away and that kind of clears it up. Hopefully that happens. So, and this is to me the bigger, more dense, and what really should be a keen, and hopefully this changes. So, it's going to be higher effective costs for smaller firms. So obviously when we talk about Ondo, and Ondo is already one of the bigger players in this whole space, but they do not have, the money or the resources that all these big Wall Street conglomerates and giants already have. So they might have the initial cost, maybe, but I doubt any other, smaller firms can even come close to competing. So NASDAQ analysis fails to account for the actual economic impact of its perennial access to information regarding DTC's plans that were relevant to its development of the proposal. Such access heavily favors incumbent exchanges, banks, broker-dealers, and other members of DTC, regardless of their capabilities to contribute to the tokenization of U.S. equity markets. So, yeah, basically what this is saying is that these rules already favor the big exchanges, the big banks, the big broker-dealers, and other members of the DTC. So basically, they are in favor of modernizing, everything. They're just not in favor of giving their power and their money, and they want to keep it within them. At least that's how I'm reading it, allegedly. For digital native firms such as Ondo, the higher effective cost of accessing essential information on new markets developments, such as those referenced but not described in relevant detail in the proposal, may hinder their ability to compete on equal footing. And it discourages competition and innovation. And that's what I'm saying. So the high entry barriers created by the differential access to valuable market information may deliberately stifle competition and innovation, putting digital native firms at a competitive disadvantage. This is particularly harmful for new market entrants attempting to offer innovative new blockchain-based products and services that rely on access to legacy equity trading and settlement systems directly or indirectly. Nasdaq has failed to account for the value of these advantages is benefited from when developing the proposal in its competitive analysis. And we'll talk about the competitive analysis in just a little bit, but that's what I'm basically saying. So they're all pro innovation as long as it's not against them and it doesn't affect them, right? So we're not even gonna have good technology or good blockchain based tokenized assets if it's just really from the big banks that already exist, if it's already from the big corporations that have been able to do this for years, right? Blockchain technology is nothing new. Tokenization is relatively newer, but again, blockchain has been around for decades. And the fact that they're doing this now, in spite of everything that's happening, it's just like, there's not going to be any competition. They're not going to strive to be better. They're just going to do whatever product they want to do, and here you go. And then, products like Ondo, Xdogs, Remera, they're not going to succeed because they just don't want them to succeed. And this is what was funny to me. So Nasdaq's competition analysis is deficient. So Nasdaq themselves did a self-assessment. They were like, let me see if I'm doing this right. They basically said that the proposal does not impose any burden on competition not necessary or inappropriate. It is fundamentally flawed and it lacks an adequate factual basis. So obviously they're not gonna say it burdens competition. Duh. Like why would they incriminate themselves? Obviously this has nothing to do with Ondo, but it's just funny that Nasdaq is saying that. So it fails to consider specific competitive impact. So Nasdaq analysis is generic, and does not adequately address the specific burdens that may be imposed on smaller and newer market participants, depending on the specific features of the related DTC functionality. Accordingly, there is no direct factual evidence in the filing or otherwise in the public domain that Nasdaq have used to consider the potential for competitive harm, and it contradicts the Exchange Act purpose. And this is really important. So the Exchange Act of 1934 says it requires the Nasdaq rules to be designed to promote and just equitable principles of trade and foster cooperation and coordination with persons engaged in regulating, clearing, settling, processing information with respect to and facilitating transactions in securities. So I'm gonna be honest, the Nasdaq as of right now currently is the best that we currently have. The Nasdaq, S&P, all these other major big exchanges are the best in the whole world. I'm not saying that they're not. That's why everyone wants to come into the US market. Everyone wants to be a part of the stock market in the United States. So I'm not saying that. I'm just saying that they're obviously looking out for their best interests. They're not, going to foster cooperation with these smaller digital firms that are basically going to end their monopoly, right? They're just not. At least I don't think so. Hopefully it happens. Hopefully the cooperation is there, and I'm completely wrong. But yeah, this article was written by Peter Curley. He's the head of global regulatory affairs. He was at Coinbase. He was a lot of great firms. So I trust him. I trust Ondo team, and honestly, I trust the Nasdaq, and I trust the administration, the SEC, everyone to kind of do a good job on tokenizing and bringing tokenized stocks all over the world and all over the give everyone access to this financial market. Right? I don't want to sound that I'm being too discouraging. I'm really not. It's just funny to me that they're doing this when they should be doing the opposite. They should be fostering cooperation and coordination with people that are engaging in these kind of stuff. So hopefully it happens. Hopefully Ondo, the SEC listens to Ondo. Hopefully what I want is for obviously tokenized securities in the future. And obviously I'm a little bit biased towards Ondo because I think they're doing it the correct way and the right way as of right now. That could change in a couple of years. I don't know. But I don't want them to speed up the process and just have the same thing that we have, nowadays, right? I want this to be good. I don't want it to rush it if it doesn't need to be rushed, right? So yeah, intrigued your thoughts. Please let me know what you think about the video. Let me know if if you agree with the SEC and with the Nasdaq and you think they should do it that way, or if you agree with Ondo. If you have your own thoughts, whatever it may be, let me know in the comment section down below. Anyways, thank you so much for watching. I will see you on the next one. Oh, please remember to leave a like, comment, and subscribe, and I will see you on the next one. Bye-bye.